The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you. It is Fantastic Friday around here at TFNN. What's Fantastic Friday about? It's all about your health and your wealth out there. Thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it is about providing you with the tools that will allow you, that will help you to be able to lead an inspired life, because I believe that leading an inspired life is what it is all about. So let's go take a look at one of our tools. This is the tool, and this is an important tool, I think, for today. This is called the ability to adapt. Now, think about it like this. The difference between a child, an infant, and an adult is what? Well, there's a number of differences, obviously, but I think probably the most important difference is simply that ability to adapt. Think how easy it is for a child to adapt to things. Do you think it's easier for a child to adapt to, difficult things? It just simply is. If they run into take a look at a pass-through of a financial situation. If they have less, are they able to adapt perhaps easier than an adult? No question about it. Now, one of the keys to trading, if you think about it, one of the keys to life is just simply your ability to be a kid at heart, your ability to be able to adapt. You always, the circumstances, which I call the winds of change, are always going to blow. It's always a matter of how it is that you're going to be able to set your sail. And so it's always about, when it comes to these markets, I think when it comes to life, be a kid at heart and learn to adapt. Learn from kids. Go watch kids. Go observe kids out there. When they get knocked down, they'll get back up, especially if you encourage them. So you want to make sure that when you get knocked down, you're encouraging yourself out there. The best story that I have, and there's a number of them out there, but one of the best stories that I have is George Burns. And when George Burns' wife, Gracie Allen, passed away, left him with, a big, huge vaudeville act, millions of dollars in the bank, George could have just packed it in. He could have gone and retired, could have gone and played golf. But no, what George did was he adapted. And when he adapted, he wrote himself a new act. He wrote himself a new career. In fact, he went on to actually play God. We're going to talk about the God in the financial marketplace out here. Ben Bernanke. What George Burns did was he made a career of being old, folks. What a great lesson to be able to learn from. So, going to leave you with our Friday thought of the day for the weekend. Learn to adapt, observe, go watch some kids play out there, see how quickly they adapt, be a kid at heart out there when it comes to life, when it comes to these markets. So, what we're going to do is the first thing I'm going to do is just what? I'm going to give you what? What is it that I'm going to do? Oh, didn't play. Well, I'm going to give you just the facts out here. Just the facts. Let's listen to this cut. When I take a look at the entire Bernanke statement yesterday in the interview, I want to play for you what I believe is the most important thing for you to listen to. So let's go to that cut here right now, Al.
The tools we have involve affecting financial asset prices, and those are the tools of monetary policy. To the extent that home prices begin to rise, consumers will feel wealthier. They'll feel more disposed to spend. If house prices are rising, people may be more willing to buy homes because they think that they'll, make a better return on that purchase. So house prices is one vehicle. Stock prices, many people own stocks directly or indirectly. The issue here is whether or not improving asset prices generally will make people more willing to spend. One of the main concerns that firms have is there's not enough demand. There's not enough people coming and demanding their products. And if people feel that their financial situation is better because their 401k looks better, or for whatever reason their house is worth more, they're more willing to go out and spend, and that's going to provide the demand that firms need in order to be willing to hire and to invest. The tools we have involve affecting financial asset prices, and those are the tools of monetary policy.
And the importance in, because, you want to know where the stock market is going. What does QE mean? Whoever would have thought that we would see truly quantitative easing number 3 when we had stock market prices where they were? The bottom line is that we do. The bottom line is that the winds of change, being able to simply, that's why I decided, this morning I wanted to talk about just simply being able to adapt. So again, with Ben's exact words, if we just, and there's each, I see the different shows out there taking different segments of Ben's words. I don't know that I've heard anybody play this one. This was in response to a question. You can go, onto the YouTube or what have you, and you can listen to the entire segment. But this caught me as perhaps the most important thing with regard to being able to answer your questions with regard to where is it the stock prices are going. We'll go take a look at charts out there. Yes, prices are going to go up and down. We've got a number, the world, there's a number of problems going on, a number of problems in the Middle East that will affect markets. A number of problems over in Europe with regard to kicking the cans, all kinds of. But the bottom line is his exact words: the tools we have affecting financial asset prices. Those are the tools of monetary policy. That is his belief. That is what he believes his mandate is. To the extent that home prices begin to rise, the consumer will feel wealthier. So everything that he's doing, one of those is to affect asset prices. Which ones? Homes and 401ks and stocks. That's what he came out and said. They will be, so to the extent that home prices begin to rise, the consumer will feel wealthier. They will be more disposed to spend. If stock prices are rising, people will be more willing to buy homes because they will think they will be able to make a better return on the purchase. This is the bank. This is the monopoly bank, folks. This is not just somebody that's wishful thinking that say, yeah, this is all logical, but this is the actual bank talking to you. So house prices, he says, is one vehicle. Stock prices, many people own stocks directly or indirectly. I know that 70% of the folks listening in today, listening to our shows, most of their wealth is in their 401k program. You just like to understand what's going on inside the markets. It's, your self-direction is maybe choosing one of 5 or 6 or 7 or 8 different boxes out there. We absolutely want to be able to help you to do that. At issue here is whether or not improving asset prices will generally make people more willing to spend. Well, they're certainly going to go out there and they're going to try. One of the main concerns that firms have is that there is not enough demand. There's not enough people demanding their product. We talk about taking a look at stock charts, and the volume doesn't support prices out there. That's exactly what he is saying as well. He's going to go ahead and try to keep pushing those prices up there because at some point in time you're going to feel like, hey, this is running away from me. Whether it's real estate, which is a reason. You got the main banker out here talking about the importance of real estate. In fact, he says, in here. One of the main concerns that firms have is that there's not enough demand. There's not enough people demanding their product. If people feel their financial situation is better, their 401k plans look better for whatever reason, we call that Uncle Ben's wild rice, and their house is worth more. Okay, so that is certainly one of the goals out here. They will be more willing to spend, and that's going to provide the demand that firms need in order to be willing to hire and invest. So we know exactly what the mandate is. It couldn't be more clear. These are the exact words from Ben, and, the question becomes whether or not you want to fight the Fed out there. That is my opinion. I think it was laid out in front of us, but what we're also going to do is we're going to go take a look at some of the other QEs. We had QE1, QE2, QE3 specifically. We also had Operation Twist. We'll go plot those on the charts out there, and then you just simply make the decisions with regard to what you should do. I'm just trying to connect some dots out here. Maybe it's some other dots because you can get caught up in all of the minutia out there about whether this is good, bad, or indifferent, whether this will fix employment or not. To me, it really doesn't matter. The wind is blowing. The question is, are you going to set your sail? Are you going to go ahead? Do you have the ability to adapt based on knowing the wind that is blowing out there right now? I think it's a beautiful thing. When you know where that breeze is coming from, and you can go back and you can take a look at history, then it's a wonderful thing. We can debate, whether this is going to help or not, whether it's going to help employment or whether there's going to be another bubble. Look, the answer is yes, there's always going to be another bubble out there. So that is what I think you need to pay attention to. So let's start taking a look at these markets out here. Had the Dow, S&P, Composite, everything finishing up. The New York Stock Exchange, though, the bigger breadth of the marketplace, was actually the leader in the clubhouse yesterday, up 1 7/10%. That does tell you that underlying in the marketplace here, not too bad of a showing out there. If we take a look at the futures marketplace right now, Dow futures up about 30 points. ES Mini, that's what we're looking at here on my screen. If you're watching us on Tiger TV, if you're listening in on the radio, or maybe you're listening on your mobile device because you went to tfnn.mobi, you can always catch the archive of this show on Channel 9. And we're taking a look at the ES Mini here. You can see that this thing after Uncle Ben was just simply, coming out right at the, what time? This is 1 o'clock in the afternoon here. And when the minutes were released, the statement was released, and the market just simply took off with conviction. If the market were to give you a break and pull back, so that you could go ahead and step in and buy this thing, there's a couple different places that you could take a look at. Let's just go take a look at retracement levels coming off of Uncle Ben's wild rice out there. And what you would look at is just simply a dead cat bounce, moving down on the ES Mini into the 1447 level. That would be one spot that I would take a look at. 1440, that would be the sweet 618 level. That would be another spot to go ahead and take a long position out here. But Uncle Ben has spoken. He's given you exactly what his game plan is. Yesterday I talked about the importance of really just being able to make sure that you've got a game plan out there. We know what his game plan is, and we're just simply going to go ahead and try to follow along. If we take a look at what's going on around the world here, you got the DAX up 1.2%. Let's go over to those charts. The DAX had completed a 1 to 1.272 A to B equals CD up. We'll go ahead and pull that chart up here on Tiger TV. Right now, the DAX got back up to that area, hasn't taken out the high that it made on September 12th. That high is 74.1036. You're at 73.97. It got up and over. It got to 74.28. Let me make sure. Yeah, it got to 74.28 this morning. I suspect that when the U.S. markets open here, what we'll see the DAX do is continue to move higher, do more than a 1 to 1.272 A to B equals CD. I think what we will do, let's go take a look at the butterfly maybe that this thing would be setting up. And it's a large one out there. The butterfly pattern would be looking at the swing point for March 16th, the swing point high there, all the way down. When I say butterfly, I'm really referring to an expansion of swing points, major swing points, down to the June 5th area. The 1.272 expansion is at 75.4246. That is where the DAX wants to at least travel to. The market is going to continue its breathing pattern, and we'll go up and down. There's plenty of doubt out there. There's plenty of reasons for the markets to pull back. I just suggest that you have your ammo ready and be ready to load up when you have those opportunities out there. What's it all about? It's all about the currency market. If we go step over and take a look at King Dollar, you can see King Dollar now making truly a 100% move of a move, coming all the way back to the swing point from May 1st out there. That swing point low, 78.67. So far in the early morning, it's gotten down to 78.71. Not a lot of volume here thus far. You can see what did occur is there were two patterns out there that should have been reversals in the 79.50 level. Those areas failed. I expect maybe we'll see King Dollar rest here for a bit, but where the King wants to move down to 77.15. It's at 78.84 right now. 877-927-6648. Give us a call, folks. We'll be right back.
Just the fact.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So let's go take a look at continue taking a look at the U.S. dollar index. So what you had occur yesterday here was you had a failure of two patterns. You had a 0.786 Gartley buy pattern. You had a 1.618 butterfly buy pattern as well. That was in the 79.50 area. When those patterns fail, folks, what they typically do is they'll turn into a new butterfly, they'll turn into an expansion pattern here. Now, when it's turning into an expansion pattern, what you're going to first run into is a 100% move of a move. That's what the U.S. dollar index is doing by making that low and coming back into the May 1st area. If we go ahead and get rid of these patterns, we'll draw the new one out there for you. And all that you're doing is we're taking a look at the expansion of swing points. And the swing points we're looking at now, we're looking at the May 1st low. That's in at 78.67, all the way up to the high that was established on July 24th out at 84.25. So if you're using a Fibonacci expansion retracement ruler out there, what you would do is if you take a look at that expansion, that's what we're looking at, you're going to see a 1.272 expansion of those two swing points. So if you took the dollar level between those two areas and you multiply it times 1.272 and you subtracted it from the highs, that's going to take you to 77.15. That will be the next target for the U.S. dollar index as it breaks the May 1st swing point out there. So what it has set in mind here, let's go ahead and shorten this up. We'll just simply draw the beautiful pattern out there. see what else pops up on the screen here. And so this is where the U.S. dollar index is headed to. It's going to go ahead and it's going to make a new butterfly buy pattern, and that's going to be that 77.15 level. Let's go to Tom in Dallas. Tom, thanks for calling. Thanks for holding.
Hi, Steve.
How are you today?
I was looking at good. I was looking at your analysis of the QEs and the market directions.
Yes.
What happened there? I noticed this one is different because most of the other QEs came at a trough, and this one's coming at a peak.
Yes.
Can you look at that? And I know where the Fibonacci's taken it, but do you think that it may have a pullback to kind of reflect similar to what those were before it went up to that?
Well, and so what you're talking about is last night on the show, I was filling in for Tom while he was up in Boston doing an event for the Tiger Real Estate Opportunity Fund. And if you haven't had a chance to check that out, folks, go to the homepage of TFNN.com. Uncle Ben says he wants higher real estate prices. That's what's going on. And if we take a look at that, QE1 certainly came about November 25th, 2008, as the market was moving down. It held for a series of weeks before it finally let go and made a Fibonacci expansion, 1.272 expansion to be exact. You then had QE2. Now, QE2 had, a little bit of a pullback, just like you were talking about, but it had already started to really get to a level where it was going to be retracing up. It was coming up against a support area. So one of the things that I would say, Tom, is if you take a look at QE2, the week of August 27th was testing a resistance area. It's coming back into the July 2nd area, coming back into the week of July 9th. And so then it started moving up. And certainly in the case of this time around, QE3, what you have is you had the market near resistance levels. Every technical analyst out there that was taking a look at going back against swing points, taking on swing points with lighter volume, where there was all kinds of bearish candles. There's been a change in polarity in the marketplace, in my opinion, and it's being fueled by this. And I think it makes the trade pretty easy. I think if the lows of this week are taken out, then that says, well, no matter what Uncle Ben wants, the market may want to have its own mind. I think that's really how you play it out there. If you take a look at Operation Twist, that occurred, folks, on September 21st. So if you take a look at the lows of the week of September 23rd, 2011, 11/14/22, those are the lows. They were tested. So it might be tested, like you're pointing out. That would be a beautiful thing if you could get a test here of the lows of this week and then hold. That would give you the information that you need out there. So, again, I think when you just simply take a look at his statement, and he very specifically, is telling you he wants higher asset prices, period, end of story. Yeah, he knows if you take a look at the report, the special report that's available on our website that Tom did called the Bull Market Housing in Florida, there's all kinds of data in there, important data that you need, some of which is that if you take a look at the general in America, you've got more homes that have got more cash than they ever had at any point in time. They're just not letting it go. And this market is all about, or getting people back to work is simply about a velocity of cash, getting that out in the marketplace. And it's got to be more than just a few companies, like Apple. So, your question is good and it's valid, but I think any areas of testing are going to be what was resistance that now is support, and that's basically going to be this week's lows. I hope that helps you, Tom.
Thanks, Steve.
You bet. 877-927-6648. We get back, we'll go see how this market's going to open.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And we're off to the races. You got the Dow up 32 points, S&P up 4, Composite up 13. The small caps leading the charge on the way up 0.5% right now. Microsoft down 4 ticks. Google up a couple of bucks. Intel up 10 cents. Cisco up 7 cents. Apple is up $6.40, trading out at $6.89. If we take a look at what's leading the charge on the way up, you got Analog Corp. They're up $8.50 here, up 12%. We'll take a look at that. Rand Gold up 4% this morning. LinkedIn up a couple of percentage points. Baidu up 3%, up three bucks and change. F5 Networks up $3. Cliffs Natural, CLF up again for another day. Leading things to the downside, you've got Spirit Airlines, SAVE is the ticker symbol. You've got Werner Enterprises down 6%. Spirit Airlines getting hammered this morning, down 11%. We'll see what that is all about. AMGN off about 2% here, and a bunch of pro shares up and down. RealPage Inc. off 4%, and Golden Minerals, they're the leader on the way down percentage-wise AUMN off 18% this morning. Our call number is 877-927-6648. So let's go take a look at some of these stocks here that are moving and grooving. Let's take a look at Apple first. Let's go see what Apple is doing. As soon as I can find that stock chart, it has now taken out its highs here. Apple is on its way up. We talked about this yesterday. Again, this is just understanding expansions of swing points. Apple now on its way to the $714 mark. It's trading at $690.33 right now. It has taken out a resistance area. That resistance area was really the September 10th high, $683.29. It is on its way to $714. Volume, only been trading for 6 minutes, but so far almost 1.6 million shares out there. Let's go take a look at Analog Corp out here. So just pick these things. ALOG is the ticker symbol. ALOG. I got the wrong keyboard. Sorry about that. Right. ALOG. Sorry, folks, I got two computers running at the same time here. Just trying to get an update out to my subscribers. So ALOG is the ticker symbol. You can see how this thing has gapped up, done it. It's up against the highs that it has out here going back into the 2007 timeframe. Does that sound familiar to you? So let's go take a look at this. We'll put this on a weekly chart, get a better feel for what it's doing. Had a big resistance area that it's up against going back to September in 2007. So this equity here on the weekly chart gets up to a high of 79.02. And then the following week, you get the bearish engulfing candles, moves down with 1.5 million shares. As it made its high with 771,000 shares. So far this week through yesterday, this had done 632,000 shares. So it's going to have the volume in it to go tackle that swing point high, which is 79.02. If we take a look at longer term A to B equals CD patterns on this equity here, let's go see if it took out a B point with volume. We're coming all the way back. So we're looking at the weekly chart. We're looking at longer term A to B equals CD patterns. We're going back to February 6, 2009 when it made a low of 24.39. That's your A point. Your B point is going to be, I'm going to choose this swing point high right out here from April the 8th out at 58.74. Does a retracement. Now, as we take a look at this equity here, what you can see is the move along that C to D leg, much more powerful than the A to B leg out here. So this wants higher price. This actually wants to get up to $86.34. But let's go answer that first question. Did it take out the B point with volume on the weekly chart here? And that B swing point, again, is the week of April 8th, the high 58.74. We'll come right down into that. See, is that it? April 8th, a week before that. That's going to be close enough, I believe. And so as we see this come through the B point here, here's where wide price spread, accelerated volume. So this is what this gave you everything that you wanted to take a look at. That's the week of March 9th, 2012. So 3 years later, so you had the 09, 10, 11, 12. Yeah. So we're taking a look at the swing point starting basically in, well, it wasn't in March. It was a little bit earlier than that. The A point on this was February 2009. And this thing takes out the swing point with volume. You've got price moving along the stronger, the inside of the C to D leg out here, and this absolutely wants to get up to the $86.28 level. It's got to clear the swing point. You want to see, in this case here, if you were in this trade, you'd want to see it close above 79.02 today. It has already tested, 78.22 thus far. Let me make sure that's the right number. Yeah, 79.02. That is on Analog Corp, Analogic Corp out there, ALOG. Let's go take a look at Spirit Airlines. SAVE is the ticker symbol out here. So I don't see what is driving that other than maybe higher oil prices. But let's go take a look at the chart, see if there's any volume behind this move. SAVE is the ticker symbol, and that is moving down with some. Well, let's see if it's got volume or not out here. Let's take a look at this. So as we take a look at this, so far the trading session, 497,000 shares in the first 10 minutes of trading. And this equity here is going to move all the way down into the $15 range. It's at $17.31 right now. It's taking out a swing point of an A to B equals CD down, and it's going to do with volume. That B point on this is going to be June 4th. The low is 1741. The volume there, 1.4 million shares. Well, you've done 500,000 shares in 10 minutes. So this thing did complete an A to B equals CD up. Now it is, and what it was also coming into, it was testing the highs, which was a bearish engulfing candle. That gave you a bearish signal. That was May 3rd, 2012 out there. That had 758,000 shares. As the equity moved up into it, 677 did it with 374,000 shares, and then it set up a evening star candle formation, 3-candle formation, completed that on July 17th. So now let's go take a look at this equity here. And as we take a look at it, the A to B equals CD down. Let's take a look and see where that actually projects. We know we're going to take out the B point with volume. It says 1580, but really 1380 is where this wants to come back to. This is going to make a 1 to 1.272. A to B equals CD, and it's going to come back into the January 18, 2012 time frame. Let's go to Maria in Largo, Florida. Maria, thanks for calling. Thanks for holding. Thanks for listening.
Thank you, Steve.
How are you this morning?
Pretty good. How about you?
Excellent. Excellent. Thanks for asking.
Steve, I know that Great Basin used to be one of Tom's favorite stocks, and now it's at such a tempting low. I'm just wondering what your thoughts are on it today.
Look elsewhere. Absolutely look elsewhere. You know, these guys, they just closed down one of their mines. That was what led to the sell-off a couple of trading sessions ago. That was, coming down with volume again. If you go read their any of their SEC filings out there, they're telling you that they're absolutely running out of money. That's why they shut down a mine in South Africa out here. Something that, in order to save this company, they have to get, just like Uncle Ben's going to put more liquidity in the marketplace. Well, in this case here, they need more liquidity. And that means either a dilution of stock. Well, when it's trading as a penny stock, really penny stock now at 9 cents, that doesn't have anything good. The only thing good possibly come out of this is somebody buying the assets. And with with these guys struggling, it's a fire sale. And these guys are on fire. And I say just look elsewhere. Okay.
Steve, don't they have another functioning mine somewhere other than the one they closed?
They do. They absolutely do. But, whether or not it's still not going to churn off enough revenue. Even in the latest filing that came out a couple days ago, even though they've closed down a mine, they still have wind down costs. In order to, and I don't know what all is entailed in winding that down, but that's taking about $40 million or so in order for them to wind that down. So just Great Basin is not the place to look. If we take a look at, let's go take a look at a stock equity maybe let's go take a look at GOLD. That is up this morning here. That's trading up $6. And so I would start taking a look at some of these other gold equities that are really strong and trying to buy them on a pullback. In this case here, what Rand Gold is doing is making a 1 to 1.618, A to B equals CD, and this thing is taking on the swing point that goes back to the February 6th time frame. So that had 1 million shares. Let's go see what this thing has done today. So far, this has done 245,000 shares. So if Rand Gold closes above 119.73, it's going to want some additional higher price out here as well. Okay, so this is, I would say, so when you took a look at Maria, when you took a look at Great Basin Gold, it would almost be like flipping that chart over when we take a look at Rand Gold out here. Let me put this on a weekly basis, just get a better feel for this. So what you can see, this is an equity here where it's trying to take out its highs. And if this gets a close above 120.73 or 120.27 right now, does it on the weekly chart with more than 3.6 million shares. So far it's done 2 million shares. This is through yesterday. This wants higher price. In this case here, this is the kind of party, Maria, that I want you to RSVP to. Because everybody at this party is having fun, they're making money, and it has just really clear sailing ahead, as opposed to Great Basin, okay?
Thanks, Steve.
You bet. Thanks for calling. So that's on Rand Gold and taking a look at what is going on out there in that gold miner. If we go take a look at, let's go take a look at some of the ETFs out here for the S&P 500. We'll take a look at the XLE. The XLE breaking out yesterday had some nice volume in it. Yesterday did 14 million shares. It's taking out the swing point on the daily chart going back to February 24th. That swing point high, 76.50, 12 million shares there. You were coming into it yesterday. I'm sorry, did I say 12 million? I didn't mean that. Oh, actually, I did. 12 million shares. You were coming in yesterday with 14 million shares. Thus far this morning, already almost 2 million shares in just the first 15 minutes of trading. So the XLE has a confirmed A to B equals CD up. That'll take the XLE to 81.97. 81.97 is going to be all the way back to the highs in 2011. Let's go put this on a weekly chart out here. Let's take a look at this is actually potentially trying to make A to B equals CD on the weekly chart. So the B point is February 24th, 53 million shares, only 35 million shares thus far, but another 14 is going to get it pretty close, pretty darn close. So if we take a look at this, if it does close above the 76.50 mark, and here at 76.94, it will at least, let's see, that'll put it, that's trading inside the swing point from July 29th. That gets that 79.97 is written all over it, but you get some volume behind it, and that actually sets up, let's take a look at the weekly chart. Let's take a look at the A to B equals CD. That sets up the move to 83.34 out there. Let's go take a look at the XLF. Let's see what the XLF is doing. That had wide price spread, accelerated volume yesterday, gapping up this morning. If you take a look at the high of yesterday was 16.20. The low so far this morning, 16.23. So now you got another gap here. This wants to set up a butterfly pattern. This was one of those equities where, or the ETFs, I should say, where you have another failed 0.786 Gartley pattern out there. And those are really beautiful because, you had your trades on both sides here. And when the 0.786 Gartley gets taken out, and it was certainly taken out yesterday, you got to give it a little bit of room. It was taken out yesterday. It says it's going to turn into a butterfly. So now let's go see what that butterfly looks like out here. Let's get rid of some of these lines. In fact, I'll just redraw everything. It'll make it a little bit easier. So we're going to take a look at swing point expansion. And the swing point expansion that we're going to look at is we're going to take a look at the high of March 27th, 1601, all the way down to the low of June the 4th out there. And when you take a look at expansions of swing points, the 1.272 on the XLF takes you to 1675. 1768, though, is where it really may be headed. And but let's go. Let's take a look, and let's do this. Let's switch over to the weekly chart here. So let's change the time frame up on this, and let's go take a look at the weekly chart. And so the weekly chart says it's taking out the swing point high from March 30th, 2012, 430 million shares, and it's got only 291 million shares. You close above that swing point, and what does it say? It says it wants to go all the way up to the next swing point. In the case of the XLF, that is February 18th on the weekly chart. That's at 1720. Let me switch back now to the daily here. Let's take a look at our first expansion. And 1768 is the 1.618. I suspect that is where the XLF wants to travel to. Let's go up to Pennington, New York, to our man Mike. Mike, thanks for calling. Thanks for holding.
Hello, Steve. How are you doing today?
I am doing great. Thanks for asking. How about yourself?
Pretty good. Hanging in there.
Where's Pennington, New York?
Pennington, New Jersey.
New Jersey. Okay.
I'm in Manhattan right now visiting, but I live in Pennington, New Jersey.
Oh, boy, nothing like Manhattan, huh?
Nothing like it at all. I'm looking at the Chrysler Building and the Empire State Building from a
what a great expensive city.
Right, and exactly what happened. We went to a fundraiser last night for World's Hunger up at the New York Yankee Steakhouse in Yankee Stadium. That was fun.
Really?
Yeah. Then we went downtown and dropped a few dollars down there.
Okay, good. Oh, that's great. That's great. Hey, stay with us through the break, if you will. We're getting a report right from Manhattan, folks. You got to love it. 877-927-6648. The Dow's up 64, S&P up 7. We'll be right back.
Just the facts.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go back up to Manhattan to our man. What did I lose? Mike. Thank you. Sorry, a little brain contusion there. And now, you there for the weekend or just for the day?
Just for the day. Heading back today, yeah.
All right, good. You wanted to take a look at which company here? HPY.
HPY.
What is that? Is Heartland Payment Systems?
Yes.
Tell me what you're doing and how I can help you.
Well, I've been accumulating it for the last month or so.
Okay.
Kate likes the stock also. And if it breaks out of this range, which is right near the top of the range for the last, I don't know how long,
Yes.
Where do you think it's going to go?
So let's take a look at. So it's a great question. Let's put this on a little bit longer term on the weekly chart and see what we have here. So if we take a look at this equity, let's take a look at the A to B equals CD pattern that it has completed thus far. That would be coming off of the swing point low back in March of 2009. That's at the 450 level. The B point on this equity is going to be right on the April 23rd level. It gets up to 1951. Now, the nice thing is the pullback here, not really that much, probably 0.382 level. So it has done its work, which was making a 1 to 1.272 A to B equals CD, and it completed that work April 4th, 2012. The projection on that was 32.59. It actually got up to a high of 32.98. So now the nice thing is it did pull back. It did some work, in pulling back. And if we take a look at where it pulled back into the week of February 10th, Mike. That had 3.6 million shares. The high was 27.93. That level was tested and held as a support area. As you say, it's at the top of its range. It's going to have to take out the highs of 32.98 from May 4th. If it does that, now I'm going to come back to the daily chart here. Just take a look if there's a smaller A to B equals CD up. So what we'd be looking at here is on the shorter term chart, you'd come off of the swing point of June 21st, that low, 26.97. What I would do is use the high, it looks like here, that came in on July 31st, and the retracement back into the August 28 time frame, probably when you started accumulating the stock here. Now, let's see that swing point if it's over with volume. That has 744,000 shares, and it is up on lighter volume. So this thing's going to need some real juice here to move to its next level, which right now is just going to be 34.42 to 35.70. That's the target range that I would put on this after it clears the May 3rd high out there at 32.98. Okay. So you need some, now it looks good because there's high level accumulation going on here. Now you're looking for somebody to come and push you up over the bar, just like Uncle Ben did with the markets yesterday.
Right. Okay, good. That's what I was looking for. Something. Next level up. Okay, great.
That's great. Hey, thanks for calling, and
thank you.
Enjoy New York City.
Yes, absolutely.
All righty. Folks, let's see. Right now here, we've got the Dow up 65 points. After this show is going to be the Nadex Bull Bear Binary Option Hour with our man Daryl Martin. Daryl does a show, folks, from 1 to 2, so we'll be taking a look at some trade setups on with the Nadex platform. Then we go to Basil Chapman from 11 to 12. Nico DeHaan, that's all about your health, folks, from 12 to 1. Again, Daryl Martin Show 1 to 2. David White Show 2 to 3. Ken Shreve, the warm-up band for the Tom O'Brien Show. Tom will be back by this afternoon. He is en route back to Florida, so we'll have Tom from 4 to 6 get his thoughts on Uncle Ben, the market. And, folks, this is the last weekend for our Tiger Dollar promotion. So do yourself a favor. Don't procrastinate, and go over to the homepage of TFNN.com. $500 becomes $600, $800, $1,000, $1,150, $1,500. That's the big enchilada. That's the one that you want. Funds are transferable, used forever on all things around here at TFNN. Thanks for being here, folks. Have a wonderful Friday, a great weekend. I'll look forward to seeing you on Monday or in a few minutes. Take care.